Welcome to the MTA Podcast Series, a weekly audio cast featuring interviews with recognized industry professionals. And your host, Ed Carlson.
Happy New Year! It's Tuesday, January 5th, 2010. Can you believe it? So here's my big prediction for 2010. We'll see the biggest correction since the March 2009 low during the first quarter, likely during January. We'll subsequently see another major rally, either close to or reaching higher prices than we're at now, then another fall drop before a fourth quarter rally. There. Now print this out, crumple it up, and throw it in the trash. We'll just take it one day at a time. He's my kind of analyst. Today's guest from SentimentTrader.com is Jason Goepfert. After attending the University of Minnesota with a concentration in finance and economics, he helped to build the online brokerage operations of a major U.S. bank from only 5 people into over 300 and a top 10 ranking. He then left to help run the operations of a large hedge fund before founding Sundial Research in 2001. Currently, the site has subscribers in all 50 states and more than 40 foreign countries. Jason is also a contributing writer to the Emmy-winning site Minionville.com, submits regular commentary for the Italian business publication Borsa e Finanza, and provides private consulting for hedge funds and managed accounts. Jason is the winner of the 2004 Charles H. Dow Award with his paper Mutual Fund Cash Reserves, the Risk-Free Rate, and Stock Market Performance. Jason Goepfert, welcome to the program.
Thank you, Ed, very much. I'm happy to be here.
Wonderful. Borsa e Finanza. You speak the Italian?
I don't, but thankfully there's someone there that translates it, so I don't have to worry about that part of it.
What is Borsa e Finanza?
It's kind of the Italian version of the Wall Street Journal, and one of the editors there had subscribed to our site years and years ago, and just kind of out of the blue asked if we would write a little weekly column for their paper. So we've been doing that for a couple of years.
So the Italian version of the Wall Street Journal runs a regular column on technical analysis?
It's actually more specifically about the Commitment to Traders report, if you can believe that.
Oh my God!
And something that I learned quickly once we started the site was that there's a huge thirst for not only technical information but also sentiment, worldwide, and it's really concentrated. It seems to be around Italy, Switzerland, countries right around there tend to be just voracious readers of this kind of material.
Oh, that's fascinating. Who would have guessed? You know what? I hadn't planned on talking about this, but let's talk for a moment about the Commitment of Traders report. It seems like there's as many ways to parse that information as there are analysts. For example, at Merrill Lynch, they simply follow the large speculators as a percentage of open interest. You, on the other hand, have a different approach. Would you like to share that with us?
Yeah, there really are a number of different approaches, and quite frankly, I don't go into it probably as much as I should. I mean, there are some guys that have been doing it for years, like Steve Brees and Larry Williams, that have really torn it apart and like you said, incorporate open interest and things like that. I tend to just look at the net position, longs minus shorts. I do look somewhat at open interest, the percentage of contracts that are currently open, and see if that makes any difference.
But don't you try to compare the commercials versus the large specs and look for extremes on both before getting terribly excited? Opposite extremes? I
do, and by definition, the commercials take the opposite side of both large and small speculators. So sometimes there's a difference between, if large speculators are long compared to small speculators. So adding that little wrinkle in there of the small speculators versus large specs sometimes makes a difference. Sometimes not. And I mean, no matter which way you look at it, I do find that the report is pretty effective for most of the commodities. Currencies, it does pretty well. Bonds is kind of iffy. And stock indices, it used to be a very good report. It used to be one of the main things that people looked at, certainly myself. But about probably 2.5 years ago, it really started to lose its effectiveness, and I'm not quite sure why that is.
Now that's just on stocks that the problem emerged?
Yeah, that's what I found. The equity indices, the S&P 500, NASDAQ 100. Actually, the NASDAQ 100 has done fairly well, but the S&P, it's just I haven't been able really to make heads or tails of it for a couple of years. It could have something to do with swap transactions, or just some interaction there with complex transactions that aren't reflected in the report. But I really don't find it very useful for stocks that much anymore.
Well, I have to agree with that. One other indicator that I wanted to ask you about, you at your website, you talk about the put-call ratio on bonds, and I've always been curious where that information comes from.
It actually comes from the CBOT. They track that information daily. And what we've seen with a lot of exchanges lately is that they're, in a bid to make things more transparent, they're actually making things harder to find. So they change the reports quite frequently and either start charging for it or bury the information in a report that it never used to be. So the information is freely available from them on their website. You just have to dig for it.
Dig.
It's really not in a logical place, but they do make that information available, and the data itself is okay. I think it's worth following. It tracks the options data for the 30-year and the 10-year bond futures, but it's not nearly as effective as just the common put-call ratios for stocks.
Listen, we'll get into more about the website in a moment, but let's back up a minute here. Take us on a trip from the University of Minnesota to sentimenttrader.com. What was your first position out of college? Were you already interested in technical analysis by then? Give us a little history of Jason Goepfert.
Well, I majored in finance with a minor in economics, so certainly finance was the focus. It wasn't specifically market related and specifically technical analysis. It was just kind of the market in general. But right out of college, I actually got recruited to be a controller for a small bicycle manufacturer, which is not really anything market related. But I thought it would give me some really good real world experience, and I mean, it certainly didn't. I learned very quickly that what I learned in school had absolutely no bearing on the real world. So that was a life lesson right there.
There you go.
And the company was interesting. It was actually the founder of rollerblades was a local kid from Minnesota, and he came up with this new concept for a bicycle called a row bike, where you row it like a rowing machine. So we designed it and made the prototype and things like that. And then the founder of our company had a falling out with that guy and canceled the contract. He took the manufacturing to China, and we ended up going bankrupt. So that was my first job out of college I had for about 9 months before the company folded. So that threw me into a whole new kind of, I'd never had that experience before where you walk into a conference room and you look around the table to 20 other guys and they say, well, today you don't have a job. So, once again, that was the real world life experience there right out of college. So,
and a good time to learn it.
Yeah, exactly. And what I did then, I didn't go to any of my contacts from college. I went straight to a temporary agency and I said, find me any position you got in any local brokerage firm. I don't care what it is. If it's in the mailroom or whatever, I'll take it. And so they called back that afternoon and said, well, we have a position, and it's actually in the mailroom. So, do you want to take it? It doesn't pay much, and, obviously not. So I said, absolutely. I said, that's it. So the next day I showed up, and that was at Wells Fargo when they were they had a small discount brokerage operation. I think it was called Wells Trade at that point. And I took that and started the mailroom, and it was a very small operation at that point. I mean, we had just a handful of folks taking these trades, and I mean, it's quite different from an online brokerage now. I mean, at that point, if you place an order online, it would print out on this dot matrix printer the order, and then we'd take the order off there and enter it manually. And I mean, it was a much different world at that point. So. But the good part of it was that I learned the business from the ground up, and as online trading kind of exploded, I learned different parts of the business and grew with it, and ended up managing the operations part of the business by the time I left. So, I mean, it was a fantastic introduction to the brokerage business.
How long were you there?
I was there for probably 6 or 7 years, right around there.
Okay. So how did, let's see, you went from there to a hedge fund, is that right?
Mm-hmm. Yeah, it was one of those things where I by that point, I kind of, I was young and stupid. I thought I knew it all at that point. So I thought, I'd go to a different part, go to the institutional side of the business and see if there was anything new to learn there. And I found it pretty quickly that there really wasn't. I mean, it was the same basic business. So I grew tired of that very quickly. It kind of fell back on a lot of the stuff that I learned at Wells Fargo, and that's really where I got interested in sentiment, because part of my responsibility in managing the operations was managing the margin side and the options side. So I had 4 different margin clerks under me, and I would listen to and take some of the margin calls for customers that run into trouble on their accounts and they needed more equity. And that's what really triggered my interest in sentiment, because I found out firsthand kind of what drove people to make some of these decisions. And you don't get any better read on sentiment than when someone's margined.
Right.
either through margin itself or options. I mean,
there's a lot of sentiment right then.
Yeah, absolutely. I mean, you're talking just pure emotion at that point.
Right.
And I remember one. She was an older lady at that point, and she always traded Qualcomm, and she done very well. I mean, she was a fantastic trader. And this was, kind of the boom of the mid to late 90s. And she just kept rolling it up. I mean, she just kept buying and buying and buying as much as she could. Well, at some point, the volatility took hold and Qualcomm dropped. And she called, and she was just hysterical. And so one of my margin clerks passed the call to me, and I was talking to her, and she said, just sell all my Qualcomm. I don't want anything to do with that company anymore. It hurt me too bad. But she was speaking about it not as a stock, but as a personal thing, like it was a person that offended her. So it was a very curious thing, and just seeing how people reacted to margin calls and the decisions they made. I mean, it was not logical by any stretch of the imagination. So from there, I started looking at some of our transaction statistics for our margin accounts and option accounts, and I started seeing patterns about when we would get heavy calls, and people wouldn't send in more cash to cover. They would just sell everything in their account, and just started seeing some of those patterns and how the market reacted afterwards, and it was intriguing to see just how that acted. So
that is fascinating. So
it was incredible to me, because I'd never really been exposed to that before. And I mean, obviously, sentiment has been a form of analysis for decades, but
sure,
I just hadn't really been exposed to it, and so this was kind of a really good firsthand look at what really drove people's decisions.
So you is it fair to say that you became interested and were studying sentiment prior to ever looking at a Head and Shoulders formation, for example?
Yeah, I had done some technical analysis just for my own account, but it wasn't deep at all. I mean, it wasn't. I had read some of the basic textbooks out there, but I wasn't really that into it.
Well, when and how did you decide to take your sentiment interest to the next step?
Well, I just started showing some of my friends at work and outside of work that were more into short-term trading, and they thought it was useful, and they said after a while I started doing like a weekly letter of just kind of updating where some of the stuff was that I was seeing from our accounts. And they said, why don't you just throw it up on the internet and see what sticks?
Really?
And so this was, I think, in 2001, where I went to Yahoo, the free Yahoo hosting thing. Mm-hmm. I think you pay $19, and you can put up a website. And I started updating some of our indicators and the commentary from there. And it got a few readers, and then they said, why don't you just start charging people and see if anybody subscribes? And so I put a couple of subscription buttons up, and I couldn't believe it when the first one came in, because I hadn't done anything. I hadn't told anybody or whatever. Mm-hmm. But you know how stuff spreads on the internet, and people started subscribing, and it just kind of kept developing from there.
Oh, that's a great story. We're going to continue with Jason Goepfert in a moment, but first a reminder that on next week's program, we'll have Walter Murphy, former Elliottician and psychoanalyst for Merrill Lynch. Okay, Jason, so what made you finally decide to start Sundial Research, and is that synonymous with SentimentTrader.com?
For the most part, yeah. I mean, we do more besides just the website, but the website is by far the bulk of our attention. So, yeah, I mean, the two are pretty much synonymous, but we do a few other things besides just the website.
You know, I've always been amazed at how much information you crank out on a daily basis. And for those who've never visited your site, this isn't just telling subscribers whether moving averages are headed up or down on a dozen different ETFs. This is hardcore in-depth research. As a matter of fact, I would say, and I have not been paid to say this is the best site bar none for the technician who wants to follow all the standard indicators we've all heard about and then some. How many indicators do you follow at your site, Jason, and how have you automated all of this?
Well, it's probably around 100 at this point. We've branched out, I mean, just from stocks to commodities, and I mean, that's, you know, one of the great things about the ETF explosion is that it's really kind of democratized some of these different markets like commodities that, you know, when someone wanted to trade agriculture, you know, you had to open a futures account. Well, now there are a lot of different options with ETFs, and it's really generated a lot of interest in some of these other markets. So that's one good part of it. So, but I do have help updating the indicators. You
do that by hand?
Yeah, for the most part.
Really?
You know, we gather the data in Excel and then export it to a program called Metastock, and then from there post the charts to the website. So we've got it down where it really doesn't take that long each day.
Those charts do not look like Metastock to me. Have you done something to Metastock?
No, not at all.
Because, well, I guess we can talk about that another time, but they don't look like my Metastock charts. They look much better, frankly. So what does your typical day look like?
I typically get up about 4:30 a.m. That's Central Time.
Central Time.
And that's I spend the next couple of hours putting together the report that we send out in the morning. I'm typically done with that by about 7. Again, that's Central Time. And then from there, I do just whatever preparation I need to do to get ready for the trading day. I'll post some things to Twitter or the blog if there's something that's developed since the comment went out. And then just during my day, I typically I'm concentrating pretty heavily on the market. I typically take a break around 11 o'clock or so during the lunch hour. I'm actually training to race the Ironman Wisconsin this year in September.
Oh, wow.
So that's a big commitment. So I've been I try to get out for a swim or a bike or a run around the lunch hour and get that done. And then it's pretty heavily engrossed in the market until close. And then after that, I spend a lot of time answering emails and trying to see if there's anything to write about for the coming day. I finish that probably around 6 o'clock, spend as much time as I can with the family, and then work again from usually about 10 o'clock until midnight or so. Mm-hmm. And then grab a few hours sleep and start it all over again.
You sleep 4.5 hours a night?
Typically, that's about right, 4 to 5 on average. I rarely get more than 6 hours of sleep.
Have you always been that way?
Yeah, pretty much. I get that right from my parents.
Amazing. Really amazing. Listen,
I'm
Jason,
sure it's not good for me, but
you know, one of the main reasons for these podcasts is so that others can find out about the personal side of people that they only hear about through their market calls and website. Now you're married with 3 children, is it? Is that correct?
Yep.
Okay.
Right.
And I know one of those children have recently been hit with an affliction that's got to have changed your life and perhaps forced you to re-examine your priorities. Would you mind sharing a little of that and talking about how things have changed for you as both personally and professionally?
Yeah, and you're absolutely right. I mean, it really did change her life. And that's our youngest daughter. She's 6 years old now. She was born with a rare genetic disorder. It impacts about 1 in every 50,000 children. So here in Minnesota, I mean, there's a couple of dozen kids with this same disorder. So an obstacle that we ran into right away was that there's just not a lot of information about it. There is an organization that tries to get information out to people, but I mean, it's so rare that there's not a lot of information available. So we were struggling at first just knowing kind of what to expect, and just what her prospects would be for going forward. So, she was delayed quite substantially until the past few years, really not speaking or anything for a while. So that was difficult. I mean, that was a challenge in itself. And then last year, almost exactly a year ago, actually, she had a seizure, and it totally devastated us because we'd never experienced that before. We had no idea what was going on. We just thought she was choking, and so the paramedics had showed up, and they explained, well, she probably wasn't choking. We think it was a seizure, and you really need to take her in to see a specialist and see what they think. So we did that, and she went through all the tests, and we found out that she did have epilepsy, which is, we found out later, quite common to the kids with her genetic disorder. And since then, she's had probably a half a dozen more. She actually just had another one here on New Year's Eve, which was her worst one yet. And as a parent, I think anybody that's ever seen this before and had a child go through this, they know it's devastating because it's so hard to watch. And it really does change your life. Not just, you need to watch them more and take these additional precautions, but it just reinforces what's important in life, and, to spend the time that you can with your children. And, I talked earlier about kind of my work schedule, but I work from home for a purpose, and that's so I can spend as much time as I can with my kids. It allows me to work a lot, but I also get to, I can drop things at a moment's notice and help with the kids, or, go sledding, or, whatever, and just try and grab those little moments that are so rare and take advantage of those. And
there you go.
And that's really been reinforced over the past year or so with my daughter. So, it's one of those blessing in disguises where, someone from the outside would look at it and say, geez, I can't believe you have to deal with that, or she has to deal with that. But there are some good things that come with that, and it's, rearranging your priorities is one of those good things.
Yeah. Listen, we are almost out of time. I don't think we can conclude, however, without me asking you the most basic of all questions. Where do you think the markets are headed?
Well, you led off with it, and I think that's a pretty good roadmap. At least I typically don't look out more than 3 months or so. So I from that time frame, I would say flat to down, especially here in January. I think we're going to run into a rough patch.
Okay. Jason, it's been great having you with us today. Is there anything else you'd like to mention before we conclude?
I don't think so, Ed.
Okay.
Thanks for the interview. I appreciate
it. How about a website address? Would you like to throw that out there?
It is www.sentimenttrader.com, and there is only one T in the middle of Sentiment Trader. Don't type the 2 T's.
Right. Oh, that's great. All right. Well, that wraps up today's MTA podcast. From Seattle, I'm Ed Carlson. You can follow me at seattletechnicaladvisors.com or contact me at ed@seattletechnicaladvisors.com. Send us your comments and suggestions. Let's keep our stops tight. Good day.